Happy Sunday. Today is October 29th. Welcome back. Uh, so I'm going to go through this very quickly. I see, one of two things in many, many setups throughout the market and especially on the weekly. And so this is going to be very, very brief. We'll see how things shake out during the week. Um, I think that a major uh, earnings is going to play a major, major part in this week, especially with some of the bigger names reporting this week. So just looking through the calendar, we have SoFi, McDonald's, HSBC, we have JKS reporting Monday morning. Monday afternoon, we have Pinterest, Transocean, AGNC, Public Storage. Tuesday before the open, we have Pfizer, Caterpillar, JetBlue, CCJ, Eaton, Amgen, BP. And then Tuesday afternoon, we have AMD, we have Paycom, a couple other names. Wednesday morning, we have CVS, Humana, Wayfair. Wednesday afternoon, we have PayPal, Roku, QCOM, Etsy, Airbnb. Right, so a bunch of big names. Thursday morning, we have Palantir, Shopify, Eli Lilly, rather, Moderna, Crocs, ConocoPhillips, and then we also have Barrick Gold, which might be an interesting play this week. Thursday after close, we have Apple, which is obviously total market. We have Carvana, we have Coinbase, we have Starbucks, we have Fortinet, Cloudflare, and then Friday before open we have Fubo TV. We have some smaller energy names, but I think the biggest ones to watch this week are going to be McDonald's. Pfizer is going to be a massive one. AMD is going to be a massive one. I think Cat and JetBlue are going to be big ones. I think CCJ and BP are going to be decent sized ones. We have PayPal, which has been absolutely failing since it hit its peak a couple years back. We have CVS, we have Etsy, QCOM. Apple's going to be probably the biggest one to watch for this week's earnings. And I think that this is the end of earnings season. So a lot of indecision in the market, a lot of kind of, retracement. This is a weekly SPX chart on your screen right now. Am I sharing? Yes, I am. So this is a weekly SPX chart. And between the last earnings season, which was here back in the peak back in the middle of July, to now, we've just pulled way back, right? And so now we're finally underneath the 200-day moving average on SPX. If you look at so let's look at the weekly real quick. I have these quick targets for my weekly for downside. I have 4117, 4100. I have 4049, or you could just round it out to 4050, and I have 3999, which you could round out to 4000. Will be the weekly targets if this continues to move to the downside. Now, one thing that's interesting in this area for SPX, let me get rid of this box, is we have an area, we're entering an area, or rather, we're inside of an area where price likes to consolidate. Look across this level, you see that there's a price formed an inside bar here in the past on a weekly, a resting bar here in the weekly, another kind of an inside bar broke the top of the range, but really came back and retested this area a bunch. So this is a very, very interesting area for SPX. So I think that magnetically, I think we go down to that 40-50 level at least. Let's look at the daily real quick just to clear things up. So on the daily, on Monday we broke down the 200-day moving average. We retested it. Tuesday we got above it, but we didn't really break above the range of Friday's candlestick. And then Wednesday through Thursday, we just made Wednesday through Friday, we just made all new lows for the month of October. So well below the 200-day moving average. We're starting to get the curls in some of the larger moving averages here, right? So there's a potential death curl, a death cross happening in the next couple of days or weeks, rather. So I'll be watching out for that. Now, everyone in the market is screaming bearish, and they're all saying that we're gonna have a nasty bear market, a real bad pullback. They're saying that this entire move here was just a bear market rally, and on a technical sense, we haven't broken out and made a higher high yet. We didn't break above this high, so technically we're still in lower high territory. And if that's the case, then there's a long way down for this. If we are still in bear territory, we have to break down below all of these lows here, right? First of all, these lows at 40.50, You got these lows at around 37 and change, right? This area here, and then we can target this 3,500. Long, long, long way down. Um, so let's just see how things shake out. For now, we'll just play these few levels for this next week. A break above 4,200 will give it a test back at the 200-day moving average. And if we get back into that 200-day moving average, we want to retest 4,300. And then from there, so there's good. It's not a bad spot to be, especially after this nice strong move. A little bit of pullback to retest some of this area of consolidation here might be a good thing. We'll see how it goes. Let's not play with a bias. Let's kind of see how it goes. Look at QQQ. I'm gonna start every one of these with a weekly so we can kind of just keep things into perspective. Right. So first of all, we have the lower high on a weekly. Still have that lower high. It's cleaner on QQQ, right? Like if we have this lower high here. If we're in a downtrend and we're gonna form a lower low, that means that we're breaking down below this area here, below 254, which is, it seems like it's a long, long, long way down, right? It's about 90 points down from where we're at currently. And I tell you what, if things do get down there, this is gonna be a perfect dip buy opportunity, personally. And I mean, obviously, like even if it gets down to this level and it goes down even lower, and you bought it up here hoping that's gonna go up and it goes down lower, just keep buying. I mean, this is the name of the game in wealth building, is to just buy, 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 buy. One day, open your eyes and look at how much you've accumulated. So QQQ, in the meantime, we've broken down below the 50-day, below the 100-day, below the 20-day. On the weekly, formed a new week low, broke down all of this previous support way back into the week of May 30th, whose low was 346.51. We made a new low here at 342.35 with the 200-day moving average sitting right there. Let's go into the daily. I think that, inside bar on QQQ on a daily. So consolidation, rip up, couldn't hold the 50 for too long, rip down, bear flag, breakdown, inside bar. So we have that inside bar, good indecision candlestick. There's a potential for this to go up or down, right? As we know. The levels to the upside, you take your entry at the break of day high. The safest entry will be that level there, the 348.84. And then from there, you just play into the previous day's candlestick, which the high was 356.88. Below low of day here will give you previous day's low. Or if you want to take the safe entry, take previous day's low as an entry. Very, very clearly defined levels on QQQ. And that's why I love inside bars, right? These inside bars always give us very, very clear level. And QQQ, obviously, strong weighting in tech, very, very strong weighting all through tech, and Apple's, probably one of the biggest holdings in QQQ. So wherever Apple goes is where QQQ goes. Wherever QQQ goes is where the market goes. So just keep that in mind. XLE on the weekly, well, the daily broke down and tested the 200-day moving average. Just go to the weekly. On the weekly, we have a reversal pattern. We have a bounce off the 200-day moving average. We have a nice strong move up. We have a doji at the top of that move, and we have a strong move back down. Strong reversal pattern. Now, we also did form lower highs on that week, right? Between this candlestick, and this candlestick, all form lower highs. And we still haven't broken up above. We did test above this level, but we didn't break above this level, and we didn't even hold above this level here at 93.15. So not a lot of strength in XLE. XLE is it's been moving a little strange for me lately for my taste, only because XLE, energy and tech usually are very, very indirectly correlated. So you see that one goes up, the other one goes down. So like when I see a red day in the market, I look at SPX, I look at QQQ, I look at Apple, I look at Microsoft, and I'm like, all right, if these are all red, energy must be up. I look at XLE, I look at XOM, I look at Oxy, and typically one of them will be set up nicely for a move to the upside. We usually just hedge our downside tech days with upside energy days. But this past couple of weeks, they've been moving not all week, but a couple of days out of the week, crucial days. You'll see that everything is kind of moving in the same direction. So not really giving great direction, not following the trend. Maybe it's changing its relationship right now, and I think I know why. So that's why I've been kind of like wary of these energy names. Did I just freeze? I hope not. Can you guys hear me? I hope not. I see my recording is fine. I see my feed is fine. So I'm just gonna keep going. Let me know if my voice is locked up or something. Otherwise, now I think that energy is typically a good hedge for tech. However, I think that money has shifted from energy into crypto right now. It feels like crypto's getting its moment back, um, and crypto's forming that inverse relationship that it had with the market in the past. So I think that's what's potentially occurring. I mean, this is just this candlestick is this week that just started today, right? Today's candle. Uh, got you. Okay. And then everything else in the market had a red candlestick all last couple of weeks, and you see that Bitcoin has formed these strong green candlesticks actually. So I think that money's flowing right back into crypto versus where it was going into gold, or it was going into energy, it was going into maybe financials, maybe utilities out of tech. Right now, it's going into some of these other sectors, or some of this back into crypto rather. Let's look at XLF on the weekly. So XLF has been forming this tight wedge for quite some time. It finally broke down a couple of weeks back. It tried to retrace it. It really tried to come back into it last week and rejected off the 200-day moving average. We got a death cross right there on the 50 crossing through the 200-day to the downside. And then we have XLF breaking down into some of our targets at 3162 and 3098, were some of the targets that we listed for the past couple of weeks. I'm going to go ahead and set this new target here for continuation move to the downside. We got 3039 and we got 2959. So maybe a 2 or 3 week move, continuation breakdown on XLF. The reason why XLF is breaking down so hard is because some of the bigger names all reported this week and they didn't have anything really positive to say. Based on interest rates, I was under the assumption that they would benefit. However, I think that just everyone is over leveraged, right? Every single person, every single institution, everything is over leveraged. And based on what Jay Powell has been saying, things need to slow down. That's going to slow down for everybody. So I think that banks are one of the first ones to show that. And I mean, XLF is probably very highly weighted in JPM, and JPM is a straight breakdown setup, so which we'll get to in a few minutes. But I don't see any strength in this, especially with that death cross that occurred. Let's switch to the daily. Let's bring this up a little bit. So this is obviously trending downward. We have the red line crossing through the black line. Let me get rid of some of these other ones. Get rid of these. We got the 50-day crossing through the 20-day, or sorry, the 200-day, the downside, called a death cross, right? And then that's that. And then we have lower highs and lower lows forming on XLF. Nice breakdown, consolidation through earnings of last week, and then continuation move to the downside on Friday. So Friday was a very, very weak day for XLF. So there could be a potential continuation for that. There was a bunch of support sitting in this area here. We've broken through it. As long as we hold this 3162, we can continue to move to the downside. If we trade above this 3162, I expect to go back to $32, and then kind of retest some of this area here. CCJ on the weekly looks very, very nice. Now, the reason why I like CCJ, I'm going to go ahead and paint this green for now. And the reason why I'm going to paint the green is because I think that, so very, very strong move, higher highs and higher lows. We formed a higher low here. We had an inside bar from this week to this week, inside bar. And then this candlestick broke the range of the previous week to the upside. And this candlestick broke the range of the previous week to the upside. And it's holding the 50-day moving average. This one got rid of it. This one recouped it. And then this one's holding. This is a retest candlestick. So I think that, let's go to the daily. I think that after all this breakdown, consolidation, sideways action, price is trending upward, pull back, it's holding the 50-day moving average. As long as we can continue to hold that 50-day moving average, and more importantly, this line here was at 38.15, this level here, 38.15, we can break out above this pivot point here at 39.78 and up to 41.22, and then from there continue our moves to the upside, new highs is what I'm looking at for CCJ. I love how it's holding that 50-day. I love how it's trending upward within the past 3 weeks. So I want to see a continuation. They have earnings this week on Tuesday. So hopefully there's a catalyst within that earnings that will continue this move to the upside. I think CCJ is a uranium company. They benefit from just materials being moved around. I think that war is a good industry for them. However, I don't think that I personally don't think that their share price stands to benefit from the economic catalyst that is war. Right? For some reason I don't see a direct relationship. maybe I'm just not looking into it enough, but I like it. Anyway, I like it to the upside. That's the whole point of that. Next one is DKS. Looking at DKS on a weekly, I like this to the downside. I'm going to leave it red. Uh, I'm looking. I've been looking for this gap fill for a very very long time. Let's go to daily. I've been looking for this gap fill from since here, and then I think like over here somewhere I was looking for it because we held the low. And then over here again, I was looking for it because I was looking for a cup and handle. But this is bearish, right? I mean, the 50 days right there. I was looking for it to kind of do a pivot machine gun or something bullish into the 50-day here. Not so close, but it's just very very bearish. I think it took out this low. Yeah, it took out that low here at 101.61. So now we're just forming new lows. So now that I'm bearish, it'll probably rip to the upside. But if we do continue to break down to the downside, uh, then this is going to be a target. $98 will be one target. Next target will be this consolidation point right here at $95 for this week for DKS. So I'm loving it to the downside. Weekly chart. I mean, it's just it had the opportunity on this week since it did an inside bar break to the upside. It had an opportunity to continue, but just weakness, right? Just weakness. So nice 2 2 3. Sorry, 2 1 2 2 reversal. Just a reversal candlestick, hard reversal. Like didn't even try to like go into the range of the previous week. Just ripped straight to the downside and engulfed all these lows here. So I think there's a continuation. As long as we break down below this 99.81, then we got 98, then we got 95 for DKS. Google, another beautiful bearish candidate, right? Google, I mean, they reported this week. Break down below that 120 level, we got this 115 level where the 200-day moving average will meet it. It ripped right through that 50-day moving average as like it held for very 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 long time. Every time it came out to the 50, it held, but this time it just ripped right through it. Now, if we do, and that's on the weekly, let's go to the daily. And this is a strong breakdown, uh, kind of a bar all on its own, and then broke down below that, retested the low, broke down the range of this one. Now, we need a red market, red day in tech and red day in SPX for this to continue to the downside. I think there's going to come test this 115.35. However, if there's some sort of catalyst in some of these tech names that report this week, this is a nice potential reversal setup only because we have not a lot of buying pressure here, and we have yet to retest this range and have yet to retest any of these candles. So I wouldn't be surprised if this got a strong move up into this area before working its way back down. I just think that it's finally broken trend. It's finally cooling off. The 50 days curled pretty hard off of that move. And I think that it needs to catch up to 200-day before it continues to move to the upside. Last time it was here was March 2023. So there's a good chance for it to just come back to it. Simple as that. Next one is Walmart. I believe Walmart is a bullish trade, personally. Um, so I drew my trend-based fib, which is this yellow line here, from the low to the high, found support, and then that moving forward, those are your fib levels. And it's reacted to them pretty well. We hit that 165.46. We pulled back to the 154.78. Now we're consolidating above that 159.18. If we hold that 50-day moving average, get rid of some of these levels here. Hold that 50-day moving average. I'll just keep the levels that I have in blue, right? Above 160.107, we got 163.77, which it hit on that week. Good daily. It gave us the levels on that week. It went straight to one, fell down hard, just like the rest of the market did. If we hold that 50-day right back to 163.77 above that 168 for Walmart. I think that there is a potential catalyst coming up. Oh, look at that. Insider So shares worth $1.5 million. And then another Insider So shares worth $713,000. All right, so that's something interesting to look at. If people react to this news, I mean, I don't know if this was on these couple of days or SEC filings come usually later, so it might be one of these big days. But that's something to watch. If it does break down below this 50-day moving average, I would just play from yellow line to yellow line, right? And let me just bring those levels over here. We have 159.18. Actually, labels, right? Okay, okay, cool. So we'll play yellow line to yellow line. If it does break down below the 50, that's 159.18. Next one's 154.78 for Walmart. But for now, as long as it holds at 50, I'm going to give it a green label. I think it's bullish. As long as it holds at 50. Underneath the 50, I'll change my mind. Let's look at X. X had a very strong week last week. Let me get rid of some of these levels, some of these trend lines. That was a rising wedge that indeed broke down and then ripped right back up, right off the 50. So strong move after earnings. Was that earnings? Or I think there was something. There was some other catalyst that ripped us to the upside. A bunch of sideways action. Indecision didn't break down below 50% of the move, so very strong move. Right, it held that 50% line, and then ripped up, made a new high. Bunch of sellers stepped in, and then the 50-day caught it and ripped it right back up. So, and we made a new high this past week. So I'm looking for a continuation to the upside. Right, I'm not trying to pull magic out of a rabbit out of my hat here. I just see strength. So bullish engulfing. Right, is that a bullish engulfing? Let's see. 33.53, 31.55, 31.32, 33. Yeah, bullish engulfing. Green candle bigger than the previous red candle. Show of strength. 35.28 is the immediate target based on the Fibonacci move measure, or sorry, the Fib move from the bottom of this candlestick to the top of this candlestick. If I were to do a trend based, let's just do a quick trend based. They tend to work out really well. Here, beginning of the move, end of the move, or there, right? So again, we got that 35.40-ish area. As long as price holds above this 32.71, we can continue to work our way to right up this ladder, right? With a key area being this 38.46, where you see a bunch of rejection towards the left hand side for X. But I see continuation. I mean, X is strong, CCJ is strong. So I think that industrials, I think, are poised to continue to move to the upside. So look at Netflix. So I don't really have too much of a bias on Netflix. I just need to know what it's going to do off of the 50-day moving average, right? It's currently rejecting that 50-day on the weekly. Price gapped up on earnings, held it, bounced, pulled back just like the rest of the market, and now we're just gravitating. We're right on top of that 50. Just so happens that we're there, right? So now, if it decides that it wants to try to take up some, let me get rid of some. If it decides that it wants to test the highs, then we have a nice setup to break all these levels to the upside, right? Now, if it does break down, if it continues to hold beneath the 50, we're going straight to that 200, directly to that 200. So those will be my levels to watch for Netflix. I think that the upside has a better trade, only because we have a final target here at 450. Downside, breakdown, it's just right here. Like the risk reward isn't the greatest. Go ahead and ID. This would be my entry. Target would be up here, 450. And that's like a multi-week swing. But even if we get one little piece of that, I'm fine with it. Right? Like, fine with it. Just like begin this move and work its way into the high here. That's like a couple $100 in your pocket. This is a 3.6 to 1 risk reward ratio off of Netflix, and that'll be essentially right. You break up, and if you want to take the swing trade, then you can. Once this thing starts ripping to the upside, you bring your stop higher and higher and higher up until it's back to even, and then you can even bring it higher, and then it'll be positive forever. So Netflix is a good risk reward stuff. I like it better to the upside. However, it can do whatever it wants to do. I'm gonna label it. LRCX. I'm bearish on LRCX. I think that it is poised to continue strong to the downside. I've had this thing on my chart. You guys are probably tired of seeing it. I've had this on my chart for weeks and weeks and weeks. Strong move down, nice little retracement into 50% of the move right here, and the continuation to the downside. And it's just been following the program, right? I have the P&L, the short position play already laid out. Entry at the whatever time I called it. Got a nice strong breakdown, break below the 200-day moving average, and then work its way down into 535. I have a 535 put for, I believe, this week, and then I think I have a 520 or 530 put for the following week, so 1110. That play is probably gonna go pretty nuts. So if this thing goes sideways, it might give us a better entry at that 530 for November 10th. But either way, I expect a nice little retest, at least below this 200-day moving average. Come back and test that 572.12 level, this level right here. Um, Maybe even 570. And then at that point, I mean, that's enough profit. But otherwise, if you want to hold it for risk, I think it's going to get eventually to this 535 level. So keep that in mind. I'll leave that red because I'm very bearish on it. Cat. Cat has had like 10 back-to-back red days. So what's one more red day, right? What's one more red day? After taking out all-time high, right? I think it's all-time high for Cat. Yeah. So made all-time high, retested the supply, bunch of supply sitting there, bunch of sellers sitting there, brought it all the way back down. People who sold here forgot to sell here, right? They missed the opportunity. People who sold down here forgot to sell up here. There's gonna be people tomorrow that sell that forgot to sell yesterday. So I think that this thing break down below low of day can come and retest some of these consolidation levels, and that's a far drop down, but why not? Why not, right? Why not? So those are the levels I'm looking at for cat. We got the 50-day curling down hard. Even the 200 days kind of looks like it's starting to curl pretty hard. They have earnings on the 31st, which is on Tuesday, Tuesday morning. And one thing I'll say about cat is, there haven't been a lot of uh, home projects that were being built earlier in the year. Money slowed down for them, but I'm sure that they were finished. But there's not a lot of people, looking to buy a bunch of new homes and build a bunch of new homes right now. In this past 6 months, the interest rates have been the highest that they've been in like 20 years. So, or even longer, right? So, uh, that is one of those industries that depends on new development, right? It depends on new development. Home Depot, you can get repairs. You get your Home Depot, we fine, right? You can do small upgrades in Home Depot, we fine. But cat, you need new things being built. You need land to be excavated. You need trees chopped down. You need earth to be moved, pretty much. So I don't think there's a bunch of that. So I think that cat is going to continue to move to the downside. Those are your levels. Simple enough. MU. MU. I don't really have a read on MU this week. I'm gonna take it off. Let me just look at the weekly real quick. I really don't have a read on it. Yeah, I'm not in love with the way the chart's set up right now. I mean, it just bounced off the 200 day a little bit, but there's just too much chop in this area. We'll revisit this tomorrow. There's a nice potential pivot machine gun to the upside, but I just can't say that MU is gonna go up if I think that LRCX is gonna go down. I just can't say that. And then there's that 200-day moving average that acts as strong support, and then we have all this volume sitting right in this level that can easily act as a bunch of support for this, right? Just across all this level here, all this level, there's all this price action sitting at this level, and so I just all right, cool, breakdown, $3 move, big deal. I don't see anything for it right now, so I'm just gonna take it. AMD, I like AMD continuation to the downside. I did call a call play on it last week. It was a nice risk reward, but it did not work out. Actually, I think I might have put a swing for this week. Let's see. AMD, yeah, I did. Okay, so let's see why for the daily. I think I'm targeting the 200-day moving average, or yeah, I think I'm targeting the 200-day moving average. Let's look at the 65 minute. Let's see. So AMD found a bunch of uh, consolidated around a bunch of support in the past. Look at the left, there's a bunch of support off the 200-day moving average over here in this area. Form the lower low and then kind of work this way back up. I think it wants to hit this 200-day moving average before working its way back down. So I'm just trying to bank on that. Simple enough, right? I'm just trying to hit that 200-day moving average Monday or Tuesday, and then from there rip down back to the bottom of this trend line. Let me extend this. AMD is not going to be a. It's not going to be a long-term play. It's going to be a 1 or 2 or 3 day play at max. But overall, we got to retest the bottom of this channel. It's just been following the trend of this channel for weeks and weeks and weeks. So I thought it was going to break out. I thought it was going to break out here. I thought it was going to break out here. Still, it's just holding down. I think we're going to pull back a little bit to that 200 day and then work our way back down to go even for AMD. So I'm going to go ahead and paint this red. Next one is NVIDIA. NVIDIA on the weekly looks treacherous. 1 week. Treacherous. It's broken down. I had a support level here at 420, 424.71, and we formed kind of a head and shoulders on a weekly. We're sitting right back at the neckline, and at this 409.43 level, broke down this 421 support or 424 support. We got to retest this 375 ish, and then from there we got the 200-day moving average right underneath that. So I'll leave that first level there. I'm gonna get rid of this level. So we have these three levels. We have 399, which we'll just call 400. We have 375, and then we have 350, which is the 200-day moving average. That's on a weekly, right? Let's go to the daily. Daily head and shoulders is much clearer, right? Um, you know, it just it ran a lot. It just needs to pull back. No big deal. I'm not looking for gap fill or anything. I'm just looking for it to pull back to the 200-day moving average, wherever it may meet it, and from there go a little bit more sideways, and then the 50 catch up, kind of way up or down, whatever, right? Like these moving averages get closer to one of the big. For now, I'm very sure. Apple, big earnings this week. Uh, Apple on the weekly is just showing a lot of weakness. We're about to get a death cross potentially in the next couple of weeks, depending on what happens with this earnings. Apple this week has been trading between this channel at 173.57 and 167.45. Let me get rid of some of these levels. I'll keep these upside. Apple's finally fallen underneath the 200-day moving average. So the daily. Finally falling underneath the 200-day moving average. A little bit of buy pressure on Friday, but inside bar, as you know, clear targets on this inside bar. Break above that, target the 200-day. Break below low of day, target the previous day's low. And Apple's also within the channel, so we can target the bottom of the channel, which would put us right around here somewhere. Before it bounces, before it decides it wants to bounce. Now, it can easily break down below this low of this day, come down, test this, and then give us a monster earning that puts us right back at the 50-day, for example, right back at the 200-day, for example. So I'm interested in seeing what that's about. I don't know if, like, usually towards this time of the year, Apple doesn't have the greatest earnings. What I mean by that is, they did have a big event that they during September where they sell their new devices and they release their new software and all stuff. And typically, like, the expectation for that's very high, and that all the sales as part of that isn't necessarily captured right away. People wait for the bugs to get out before they start spending money on this stuff. I think that Christmas season is much better for Apple. Like, they announce in September, and then kind of like 3 or 4 months of buying, and then the next earnings, which is in December, January, February, will be, I think, a little bit better for Apple than this earnings. And if this earnings goes bad, then this either goes sideways or this whole thing continues to trend downward, really, really hard. So I'll be watching, as always. Apple's one of my favorite stocks to own, and but historically they're just weak at this time of the year. So I think that they're gonna continue with that. They got a 1.39 estimated earnings per share with a $89.271 billion revenue. This seems a little bit low, which might be okay, but still, I think that if they need to talk more about this AI investment, right? Like, if they need to, like, really pump this during their earnings call. Let's see. Apple has to answer the $1,000 question. Apple will deliver September quarter results on Thursday, and those earnings will answer a key question: are consumers still so willing to purchase $1,000 iPhones in the current economy? So I think the answer is no. No right now. Yes in a month, right? Yes for Christmas. Yes for the holidays. Yes for beginning of the year. September typically is a no for me, dog. So we'll see what happens with Apple. Right now, I'm bearish on it. I'm gonna leave it as red. Amazon on a weekly, very, very interesting candle. I do have this trend line that I drew on a daily. I'm not sure if it's. I don't know if I drew it on a daily or the week. Let me look at it. Yeah, I don't know. I don't know where I drew that, but right now it's holding that trend line. It did fall beneath the trend line on Wednesday, and then Friday we got a nice little bounce. So Amazon can, and I think that's based off of earnings. Yeah, so Amazon, as long as it holds this area 127.92 ish, and then it can work its way into the 50-day moving average. Here's 50% of the move at 134.50 45. 50% of this move from this high to this low. Now, it's that can be the immediate target, the 50-day, or that 50% of the move before either works its way back down or rips through. This is going to be a crucial level here, right? This golden Fibonacci level here between the 50% fib and the 61.8% fib. This area here will be very, very crucial to what happens with Amazon. Now, I think that it can get up to that level. I think that it has a strong bounce out of it. I think that there's a potential for continuation. We made a low on Friday, and price is currently trading above that low. So as long as tech participates, there's a potential for this cup and handle to play out and take us back to that 50-day moving average, back into this area, and then from there decide whether we want to go up or down. But I think that we go up first, so I'm gonna label it green. See what happens. Baba weekly. Yeah, Baba to me doesn't. There's like I'm not really interested in trading it right now. Um, we did it did break down and touch all of our levels and did bounce. Uh, but Baba's I haven't had a good grasp on it this past couple of weeks, so I don't really want to get into anything with it. Um, Let me just see something here. Buybacks. Okay, so that's interesting. Buybacks from larger companies to stabilize liquidity in the market. All right, so there's a push on China to stabilize their market. China's real estate market is in shambles right now, by the way. And it's not being reported on a lot, but I mean, on a technical aspect, if this breaks above the high of this day, it can target the high of this day. 50% of this, this is just a candlestick. You can get rid of that. Target there, bring us back there. 50-day meters right there. That's the upside. Uh, but right now it's like strong move down, little pullback. Actually, let's do. Uh, this is the current trend. Strong move down, a little bit of pullback right into 50% of the move. So above this 50% fib, we can target the 50-day moving average. We can set up a nice risk reward on that too. Where nice risk reward on that because we could take our entry off of the top of the high of day, and we could take our stop right at the open, which will give us 11-1 risk reward, like monster risk reward. A more realistic one will probably be this one, 2-1. And then as the price moves up, you can bring your stops. Right? And then break down below. I mean, we're already down here, so break down below 618 fib. Target that 786 fib at 8111. Underneath that, target 79. And if we break down, then we got that same move that we have in LRCX, which is basically this move, right? So either way, I don't have an idea where Baba's gonna go. I'm gonna go ahead and just do a blue for now. Disney, I'm bearish on Disney right now. Disney is disappointing. Put the dis in disappointing. So we're way below all moving averages. We're underneath. We're at $79 on Disney. The last time we were at $79 was COVID, coronavirus announcement 2020 was the last time we were in this territory, right? And then before that was way over here in like 2000 was it 2014? So I mean, historically, buyers like it at this level. You see that there's a consolidation here. Buyers like it. They bought it up. Same thing here. They bought it up. Here, I'm not so sure. I'm not so sure if they're gonna buy it up here. I mean, look at where it's at, and look at how weak it's been, and then just lower highs, lower highs, lower highs, lower highs, lower highs. So below that level, below that COVID low, I mean, things can get spicy. Things can get spicy for Disney, right? I'm gonna go ahead and leave the last one over here. Things can get very, very spicy for Disney. I'm not sure what's going on with them in their real estate venture down there in Florida, but um, I know that they just raised prices. I think to like $50 or $180 or something. I don't know. My wife pays Disney Plus, and she's like, "Yo, they just raised the prices on us." But my kid needs entertainment, so I'm gonna have to pay it anyway. Uh, so that might be a move, a play for them to make some more money. But this stock price is looking beautiful to the downside. I mean, just rip this low here, take out COVID low, and then target that 2014 low, which is not very far away. I mean, let's look at them 65-minute chart or whatever, 45-minute, 35, 1 hour, whatever it is, right? Look at how it's not far. We're just right here. Yeah. One bad day can bring us down to $70 pretty quickly. After 100 years of innovation, Disney's at a crossroads. Disney accuses Ron DeSantis' appointed district of withholding documents. Feud escalates. Walt Disney pushes back Snow White release to 2025. So nothing great in the news for Disney right now. So that could be a nice continuation catalyst for the downside. JP Morgan. JP Morgan absolutely died on Friday. I'm so sad that we missed it. I usually like take a look at this every day, and I just totally missed it on Friday. We had a nice little bounce into the 50-day moving average on Wednesday. Thursday, we filled that moving average, broke down the low to the previous, broke down the previous day's low. Friday broke down all these lows, brought it back into the lows of May 2023. Strong move to the downside, strong reaction off this 200-day moving average. So I think that there's a potential continuation here. I'm looking for not that. I'm looking for this, and I'm looking for this. 131 and 126. I'll tell you what, if JP Morgan gets down to 126, if you're interested in owning a bank, I think this would be a great bank to own. Personally, I think that they're the biggest crooks, right? Like they got like billions of dollars of cocaine seized in Chicago that was labeled to them on the manifest, and you heard about it once in the news, and then nobody talked about it ever again. So the stock market, the ones that win are the crooks. So we gotta side with the crooks sometimes. So maybe put some JP Morgan. Oh my god, my daughter's gonna hear this like 20 years down the road. She's gonna be like, "Yo, what the hell's wrong with my dad, bro?" But it is what it is, kid. So I like it to the downside. If it gets down here, I'm gonna add. If it gets down here, I'm gonna load right back into this gap. I'm gonna load it, but I don't think it's gonna get down here anytime soon. But I can see 126 in days. Give me a couple bad days, JP Morgan, and it'll bring us right back into that 126. So I am voting for a red bookmark here. Let's go to Tesla. It is what it is, kid. Yeah, October 30th, Apple has an announcement at 5 p.m. PST, which is 8 p.m. Eastern time. What will I be doing at 8 p.m. Eastern time? I'll be watching the Apple announcement. So I wonder what it is. I think this is the first one that they've ever announced that isn't like the developers conference. Like those like developers conferences that are very techy, that come after their product launch. This is strange. I wonder what it's gonna be. I don't think it's gonna be anything. Apple. The thing about Apple is that they're not very good at selling to investors. They're good at selling to the public, which then translates selling to investors. It's like the public gets it, then they buy it, then the company reports on it, then the investors buy it. Apple's really, really good at making you feel like a really good client. Like I have like 100 Apple products in my line of vision right now, and I feel really good about it. Right? They're really good at that. So interesting. We'll see what they talk about tomorrow. Tesla had that wedge on a weekly, broke down hard last week, and then broke down the 200-day moving average and retested it this past week for the daily. I still got my downside targets here intact. I got 194.42 and I got 160, which would be, again, if we get to 160 on Tesla, I'm gonna take everything that I own, take it straight to the pawn shop, and I'm gonna make my daughter get a job so she can help me buy some Tesla shares at 160.29 because this would be an absolute gift. Between those levels, let me give you another one. Let's go here, and we really, this level at 210.42 needs to really hold strong as a resistance. Now that we're here, break down hard, and then from there we got that 194. We got 200, then we got that 194 to worry about for this week, right? For this week, let's take it week by week. Let's go ahead and stretch this out to make it a little bit more realistic. Right, break below this low here at 202. We can reach 2 pretty easily. Right there. Underneath that, 195. Maybe put a little pinky toe on 194 and then bounce. We'll see what happens. But I like Tesla to the downside. I'm gonna go ahead and label it as red. Data dog, not really interested in it. Although we did have an inside bar underneath the 200-day moving average on Friday. So you can do the same thing. You can play. Let's get rid of some. I'm hit or miss with D dog. D dog does what it wants, and I'm just a victim of it. So just keep that in mind. Underneath that, we got this level here, and then we got this level here. For data dog, right? And then we could also trend based fib. Or sorry, not trend based, just a regular strong move down. Actually, let's do a trend based. Strong move down, pull back. You know, so this is a key area for D dog where it's currently holding. So breakdown would be nice. Move to the downside, give us $78. We need that $75. Otherwise, if we break to the upside, then we got previous day's low here at 84 and change. Above that, we got the 200-day moving average. And above that, we got some previous. So the upside is more likely only because we have some price that we would be revisiting, some levels, some very, very key levels that we would be revisiting. However, we do have downside that will give us a nice strong move to the downside here to 78, 75, maybe 72. For Datadog, I am going to paint it blue. I would prefer red, but I'm going to paint it blue for now. Twilio looks like a strong continuation to downside. I'm not even going to talk about it anymore. Let's call it red. TSM, as a dissatisfied shareholder, I think TSM looks like it wants to go back to this $84 mark. We'll revisit. I don't want to do too much analysis now because my feelings are hurt. CVS is beautiful to the downside. Beautiful to the downside. Very, very clear price action target here at 65.10. Underneath 65.10 is whatever that number is. Now, last time we discussed it, the first target was this level here, 68.11. Underneath that was 65.10, same target. Let's look at the weekly on this. This will be my last one. Actually, I want to look at Croc's report. We do have a nice little bear flag or H or however you identify with it, showing up on this setup here. $60 and then 52, which will be gnarly. And then let me just do regular fib. I wanted to do all the way up here, but I just feel not like a swing high. Yeah, this is the sort of daily. We have this does not happen. All right, so we had that strong move to the downside. Bounce, right? Kind of retested the lows, but didn't come and sweep the lows. Ripped right into this 50% mark, consolidated up, price all around it, and then it rejected it on this day. Opened above the close underneath, way underneath the 618 fib here. Rejected 618 fib, rejected 50-day, working way down, accelerating down hard, making new lows every single day. So I think the natural target for this is 65.10, like very, very simple. If it goes beyond that, cool, but I think 65.10 for the next couple of days for sure. And then let's look at Lulu real quick. Now that they've had a full week in the S&P, Lululemon broke my support. I'm gonna get rid of it. Super aggressive anyway. Sitting on a 50-day moving average, holding 384.60. If it can hold that 384.60 and that 50-day moving average, it can work its way back up to test some of these levels here at 397.99, 405, 420. But it really needs to hold this current level where it's at now with that 50-day and that previous resistance level acting as support. Good confluence there. I like it to the upside. I'm going to paint the green. If it holds that 50-day, big if. Let's look at Crocs, and that'll be it for us tonight. Yeah, I mean, I don't know. I don't know what's up with Crocs. I don't know what's up with Crocs. They're not looking too hot right now. They're not looking too hot. The reason why I say that is because Crocs is everywhere that I look. So like every online retailer, I see like 50% off on Crocs. And I don't know if it's like maybe that's a seasonal thing that I just never paid attention to in the past. I just see like liquidation everywhere I look with Crocs, right? So, uh, and that might be the same players like what Tesla ran. They said, all right, we're gonna just sell everything. We're gonna decrease our margin but increase our volume to make more money. Big volume, smaller margin. The small margin is okay because we got the big volume. And then they did end up making more money, earning more and making more higher revenue, I believe. But at the expense of quality and all the kind of stuff that failed. I don't know. Like Crocs, obviously, like they're not a tech company. Crocs is just like maybe they gather data on their sales, but they literally just take like Chinese plastic and bring it to America and manufacture it here. And I don't even know if it's made in America. Who knows? But um, it's probably not made in America. Actually, now I'm curious. Let me look it up while we're here. um, but I just see everywhere I go, I see like if you just go to Google and type in Crocs, um, they are like the first thing that you see. Let me see. Yeah, like all right, cool. You got some like cool looking ones. First of all, there's like a Fugazi one on Temu for like $15. Uh, they got some good cool partnerships like Demon Slayer, Lisa Frank. That's cool, right? Halloween. That's cool. Well, yeah, Crocs is a summer shoe. However, like I've been outside all weekend and I've seen people. I was on a hike on Saturday and I saw people hiking in their Crocs, which was kind of weird, but cool, whatever. Um, I saw people all out in the street today, even though it was raining, in their Crocs, right? Like I know, like people like wear them to go to the gas station and go grab something real quick at the supermarket or Walmart or Target or wherever the hell JC Penney if that still exists. Um, all these places, and I see people in Crocs everywhere I go. I saw somebody in the rain with Crocs on. I'm like, yo, bro, it's raining. It's raining, and I'm just like, whatever. People don't care about getting their feet wet. Once I was done with my hike, I threw on my these Crocs that I have that are like I don't know if they're Crocs. I don't know if they're Crocs actually. Now that I'm talking about it, but they're like chef shoes, very very comfortable shoes. That I drove back home in. But anyway, looking at this, I mean, they have a bunch of sales. Yeah, they got a bunch of cool partnerships, but like, is that really making them money? Like I own three pair of Crocs. I got one that my wife got me. I got one Salehe Bamberry collab Croc, which is rare, right? The only reason I got it. And then I got this other chef shoe. I'm like a strong chef aesthetic lately. I got like all these knives and all this shit. I don't even cook like that, but but like, all right, so like I got my three. My daughter has her couple of, her three. My wife has her three. Like, I'm not buying any more Crocs. Like, you buy your Crocs, and then like, where's the market? Where's the market expansion for Crocs? I'm sure there's people who are like massive, crazy on their Crocs, and they're like, yo, they have like a wall full of Crocs or whatever the case is. But to me, it's not that serious, and I think that a lot of people share that same sentiment. You buy one, two pair, and then you're done. Like three pair, you're done. You don't need more than that. So anyway, I say that to say that they're liquidating. It's not like a product that you have to constantly. They last you probably like 2, 3 years, 4 years, 5 years, and then maybe you buy a new pair. Um, I think that Crocs is going to reject this 50-day and work its way back down to continue to move to the downside, right? Just continuation. Now, go ahead and mark this. We are forming higher lows, trending upward on this move here, right? Trending upwards. So easy to break down. Those are the Crocs for up there in Jen's neck of the woods. Snow boots. All you gotta do is wear some thick socks. Those look crazy. Are those real? Yo, those look crazy. And I guarantee somebody in Brooklyn owns a pair of them. Wow. Yo. Break down below this trend line, hit that $82 mark. Underneath that, we got 80. And then that's insane. That's a real product. That's absolutely okay. That's a real product. But you know what? There's a market for it. I'm sure. There's a market for it. All right, so here are your levels for downside. Break down below this bear, whatever flag or wedge or whatever this is, rejecting the 50. Breakdown hit 82.25, 77.56, 72.96, 67.05. I don't know what their expected move is for this earnings. Right, and what you can get from Thinkorswim. Their estimated earnings per share is $3 or three for every share. And then we have $1 billion revenue, which I mean, I don't know. For the past like 2 months, it's just been Crocs 50% off, buy one get one, etc., etc., etc. those are those are actually pretty cool. My wife might be into something like that. Those actually look really crazy. She looks like she's a size 25 shoe. Um, the shoe in that picture. Yeah. So I think there's more to the downside. I don't know what the expected move is, but if we do get a nice strong move, we can eventually target the $67 mark, which puts us back at the November 2022 area. Which is not far off. So yeah, so that's it, guys. That's what I have for this week. Let me go ahead and rearrange this. Rearrange this by color. Okay. Guess they're stuck with some of these other ones. I'm gonna go ahead and post this on the trade floor, and I'm gonna go ahead and post it in the headquarters. Yeah, thank you guys. Thank you for being here. Thanks for keeping me accountable, and hopefully you guys are getting value from this. And I will see you tomorrow in about 11 hours for market open. Appreciate you all. Have a great night.